All right, guys, thank you so much for making it to episode 3 of my brand new YouTube series, Josh Talks Stocks, and we are back at it with yet again another episode, and we are going to be talking today about what you guys have finally been waiting for, what everyone has been asking me to post about, and guys, today is it. Today we will be talking about how to trade options versus how to trade normal stock. All right, guys, so first things first, and what most of you already know by now, but most of you are already aware of how to trade stocks. All right, and stocks are simply described as fractional ownership of a company or institution. Okay, so I mean, how simple can that be, guys? To make it as short, simple, and as sweet as possible, let's say the company Netflix, for example. If Netflix as a stock is trading at $125, which is completely not true. Netflix is soaring right now and has a valuation that is ridiculous. But that's for another day. If Netflix is sharing right now, guys, at $125 as a stock, you can now own one share of Netflix stock for $125. Okay, and multiply that by how many shares you would like, so on and so forth. Simple enough? All right, guys, and so options are a little bit trickier, okay, but we're still going to be able to break it down in layman's terms for you guys to understand. So the first thing that I'm going to do is explain the business term, the actual business definition for my guys out there that like to take notes, and then I'll break it down into terms for you guys to understand. So really quick, for options, an option is described as the contract in which the owner owns the right but not the obligation to buy or sell a stock at an underlying price prior to a certain date. All right, I know all of you guys probably right now, my beginners are looking at me like, dude, what the heck are you talking about? So let me explain. All right, guys, so this is what I want you guys to remember when you're trading options, okay? To make it extremely simple, there's only two things that you need to remember, okay? You're either betting against the future of an underlying stock to go up or betting against the future underlying of a stock to go down. That is the simplest way that I can explain it, but let me really just break it down for you guys so you understand what exactly that I'm talking about. So, when you're playing an option, there's two ways that you can play it. Obviously, you're betting on the future of a stock to go up, or you're betting on the future of a stock to go down, okay? If you're betting on the future of a stock to go up, what you're going to want to play or pay for is called an option call, okay? And if you're betting for the underlying future of the stock price to go down, then you're going to want to pay or to play for an option put. But let me explain to you guys what those mean in a little bit more detail. All right, guys, so really quick example on how I'm going to talk to you guys about the benefits of option contracts in comparison to buying your normal stock. Once again, we're going to use Apple as our stock example, and in this example, Apple is going to be trading at $105 or $125 a share. All right, and if you guys are just going to leave that $125 in the stock market for, let's say, a full year just to see how it does. All right, Apple's a good stock. Apple's a good trading stock. So you'll see a return on investment there. That's your ROI of about 7 to 8%. Okay, and in this case, at $125, your return on investment will be about $10. Now, in contrast, buying Apple in the money for a call option, all right, is a little different, right? When we talked about buying option contracts in our earlier videos in episodes 1 and 2. I'll leave a description and the link for you guys who haven't gotten a chance to catch up on those. But yeah, so option contracts are a little bit different in the way that once you buy an underlying contract, you're buying insurance on 100 of those underlying contracts at that strike price of $125. So if you have a really quick upswing in the market, let's say a big 30-minute $10 uptick in the market, which has happened before, look what you could profit on. And guys, this happens every single day. So just something to think about. Alright guys, so there you have it. Hopefully by now you guys understand how to play options versus how to just own ordinary stock. Alright, in the very next video we will be talking everything stock options, how to trade stock options, what to look for, the importance of a watch list, and the very nitty-gritty details. I know I mentioned to you guys a lot about time and how important time is as a factor to multiply your earnings when playing stock options. So as always, I will see you guys on the very next video. Don't forget to like, subscribe, and you guys have a blessed day.